Hi, welcome to my channel. Today's subject, can you really make money by shorting stock in the US market? I know that when it comes to short selling, a lot of people immediately think of high risk, hedge funds, or betting on a stock to crash. Is it really that simple? Let's take a look. First off, shorting can actually be profitable. Shorting allows you to make money when stock prices fall, especially during economic downturns when normal stock won't actually help you make money, or when companies release bad earnings reports. Short sellers borrow shares, sell them, and then wait for the price to drop so they can buy them back at a lower price and return the shares, pocketing the difference as profit. Take, for example, the 2008 financial crisis. For example, many hedge funds made a fortune by shorting stocks related to subprime loans. Most famous case is probably the investors portrayed in the movie The Big Short. They saw the bubble coming, bet against it, and ended up making loads of profit. So, if you're able to accurately predict a market downturn, shorting can definitely be a way to profit. However, that's very difficult. On the flip side, there are people who are strongly against shorting. It's very high risk because the potential losses can be limited. When you buy a stock, you can only lose the amount the stock is worth. However, if you short a stock, there is the potential for that stock to go and rise infinitely. Thus, the risk is technically infinite. One example was GameStop. It was a perfect example, as when people found out that GameStop stocks were being shorted, the very professional individuals at r/Wall Street Bets banded together and raised the stock prices of GameStop by quite a lot. And many hedge funds and hedge fund related businesses lost quite a lot of money, with one losing as much as $2 billion. So at this point, why would anyone short stocks if the risks are so high? Because shorting plays an important role in the market. It provides a mechanism for uncovering problems in the market. When a company's stock is overvalued, short sellers are very keen to notice that, and they bring attention to the issue by selling the stock aggressively, signaling to the market that this stock perhaps is a bubble. For example, if a company is hiding issues in its financial reports, short sellers can dig into those problems, short the stock, bring attention to the matter, and then might result in the bubble popping. And if the bubble pops, short sellers can earn a massive profit on their investments. So, the answer to the question, can you make money by shorting the US stock market? The answer is yes, and it's quite profitable if you know how to do it. But there are a few important conditions. One, you need to have a deep understanding of the market and be able to make accurate predictions. However, the most important part is that you have to be prepared to handle the high risks, infinite risk. Short selling isn't for everyone, especially not for beginners just looking to make a quick dollar or two. It requires strategy, knowledge, and very strong risk management. It does provide investors with an opportunity to profit from declining stock prices, and in some cases, it even helps the market become healthier, as it will pop possible bubbles. But it's important to acknowledge the risks, especially with the increasing power of retail investors and social media influence. So, if you're really interested in shorting, make sure to take the time to study and research the market. Do not jump in blindly. Also, that is not only for shorting. Just any stock in general, you must take the time to research the market. After all, the only ones who make the money in the stock market are those who are strategic and disciplined. That is it for today's video. Thank you for tuning in, and feel free to share your own thoughts on any of the subjects I discussed. Bye!